So now let's take a look at quarterly estimated taxes. You all understand you have to pay your taxes. You have to pay taxes once a year on April 15th. What you're really doing on April 15th is sort of an act of reconciliation because throughout the year, you have been sending money to the IRS. And that big old tax return you do on April 15th is where you figure out if you sent them too much, you sent them too little, or you sent them just the right amount. It's usually a little too much or a little not enough. Those taxes that you're sending in throughout the year are called your quarterly estimated taxes. The estimated part of that phrase, quarterly estimated taxes, is really important, especially for those of you prone to anxiety around taxes. The IRS knows that throughout the year, we are at best guessing as to how much we owe because there's a lot of things we can't know over the course of the year. The tax law is always changing. We're anticipating what we're going to earn throughout the course of the year, which is guesswork in a big way. So they want you to make a reasonable effort to estimate what you earn and what you will owe them every 3 months. Another compelling reason to keep up with your tax return, your bookkeeping. And what you are sending in is an estimated tax payment for your income and for your self employment tax if you owe anything. Your self employment tax is your contribution to Social Security and Medicare. Now, if you've ever been somebody else's employee, you're thinking, well, wait, I never had to do this before. That's because your employer did it for you. They took the money out of your paycheck. Remember that there was a chunk came out for taxes, federal, state, Social Security, Medicare, and they sent that to the appropriate agencies for you. Isn't that nice? As a self employed business owner, you need to send in those quarterly estimated payments. And the dates, there are 4 dates a year, and they're a little not what you expect. They are April 15th for January, February, March. For April, May, June, you send them in June on the 15th. For July, August, September, you send them on September 15th. And for October, November, December, you send them on January 15th. That means twice a year you are sending them before the quarter has ended. Don't ask me why. I don't know why they do that. Just know that that's how it works. You send it in using the form 1040 ES, which is the smallest and simplest form the IRS has ever created, or you can do it all online. Now, the real bugaboo is how do you figure out how much you owe in quarterly estimated taxes? And I have wrestled with this question, and there isn't an easy answer because what they really want you to do is not just look at your business income, but look at your whole tax picture and then figure out what portion of your business income should be going to both the feds and the state if your state has income tax. And I don't know how to do that. I would say that this is something you need an accountant for at least once. In your first year in business is a great time to work with an accountant and see how they calculate it and ask for their advice on what you should do going forward. Is there a simple percentage you can use? Is there some other measurement you can use? But that's what quarterly taxes are all about. Everybody is paying their taxes as they go. Corporations, businesses, tiny businesses, people like us. And then on April 15th, we fill out all that paperwork to calculate how close did we guess? And that's the sum of what you need to know at this point about quarterly taxes.